Welcome to this month's update where we chronicle the life of a real money ASX stock swings trading portfolio for the end of September 2023. This is where we put it all out there, warts and all, so you can see exactly what investing using a trend following swing trading systemized process is all about and why it works long term. We run this portfolio in real time with real money, so there's nowhere to hide. You may have also seen some of the videos we've put out there this month that showcase some of the trades that we've taken, the ones that we've bought and the ones that we've sold based on our unique buy-sell algorithm. They've been both winning and losing trades, so you can see what the day-to-day experience is all about. Now, in these monthly performance updates, I benchmark or compare against the ASX 200 accumulation index. It's basically an indication of how the overall market is performing following the largest 200 listed companies' performance, including their dividends. And we know that most balanced funds and index ETFs slightly underperform the market over the long term. So it's a good one to use for comparing active versus passive investing over the long term, even though it's not 100% apples for apples. Now, while we do these updates monthly and show you the performance in real time, it's the big picture that's most important. When investing, you're going to see both positive and negative months as those winning and losing trades play out. However, you're not just investing for a month or two, are you? You're investing for a lifetime, or at the very least, well into your retirement years. So it's not 1 month's performance or even 1 year's performance that'll make or break your portfolio. It's the culmination of all these months, years, and decades all put together that helps you achieve your long-term investing goals. No portfolio will ever go up in a perfect straight line, or nor should you expect it to. Whatever investing strategy you follow, you want it to be able to ride out the inevitable short-term volatility and beat the market over the long term. You wouldn't look at the value of an investment property every month and make rash decisions based on a month or two of positive or negative growth, would you? It should be the same with your stock market investments. So while we suggest you only care about the long term because that's what will matter to your retirement or your long-term goals, as part of our commitment to transparency, we show you our real money portfolios in all different timeframes. That way you can see all the ups and downs and learn from our journey, allowing you to shortcut your own path to becoming a successful and peaceful investor. So let's start with the important stuff and take a look at the big picture first. So since taking our first trade at the start of 2016, right up until Friday, the 29th of September, our real money ASX public portfolio has grown 138.47%. That equates to 11.87% compounded per annum. The market, on the other hand, the ASX 200 accumulation index, has grown at a rate of 8.08% or only 82% in total. We originally started this portfolio with $80,000, and that few extra percent per year of outperformance has already equated to tens of thousands of dollars difference in just over 7.5 years. If we took that type of outperformance and drew it out over a 20-year period using a compounding calculator, you can see the story really start to unfold, and the gap just gets wider and wider. 8.08% would help you grow an $80,000 portfolio to $378,440 over 20 years, which would seem pretty good, right? But doing just a few percent more and achieving 11.87% per year almost doubles that, growing to a whopping $753,985. Now, of course, you've got to take taxes out and other costs, but you can see why having a big picture perspective is so important to helping you see through periods of short-term volatility. Think of it this way. Now, when we look at this picture of New York City from a distance, you can appreciate the time and the effort that's gone into building this modern-day marvel. From up here, it's peaceful. All things are working together and we can just happily exist in its wonder. Life's pretty good from up here with this big picture perspective, isn't it? But when you zoom in and get caught up in the chaos, it's busy, it's noisy, and it's super stressful. That's when we see accidents, anger, stress, and it's the most likely time when you'll see mistakes happen. When you can see the big picture and you have a plan that takes you where you want to go, you don't need to sweat the small stuff. You can breathe, you can relax, and you can be at one with what you need to do. It's the same with the markets. If you can see the big picture and avoid the day-to-day craziness by blocking out all the unnecessary noise, you can enjoy the journey while also achieving better results. Who would have thought that only a few percent per year could almost double your money over time? It makes a massive difference to your portfolio and your performance over the long term. It's no wonder that Einstein called compounding interest the eighth wonder of the world. Yet we speak to so many investors who start off in the markets that have a rough first few months while they're learning, and they get caught up in the short-term craziness of the markets, that short-term volatility. Then they give up altogether, thinking that they can't do it for themselves, when the reality is they might just not have had the right strategy, or they picked a tough time in the market to begin. They unfortunately then make the mistake of putting their money back into an average fund that gets an average return of around 8% per year, not realizing at the time that it may actually cost them hundreds of thousands of dollars over their investing lifetime. If we had that same sort of short-term mentality and got caught up in the craziness of the markets, we'd be giving up right now after seeing a 2.99% loss in our portfolio last month. We would have been worried about the price of oil rising, keeping the threat of inflation alive. And we might have panicked when the market fell 1.2% on the 6th of September or 1.37% on the 20th. But we didn't worry, because we know that there'll be months where we also see good gains too. And last month was just one part of the overall big picture. In the past 5 years, for example, when we take a little bit of a look at a bigger picture, our real money portfolio has grown 81.92% compared to the market at only 38%. In that time, we also had the COVID crash, where many people had to watch their portfolio fall by 30% or more because they didn't have a strategy to get out. Because of our unique buy-sell algorithm, our members move quickly to cash by selling out, protecting against the majority of the fall. The great thing is you then get alerted when to re-engage the market and buy back in. Now, because you don't lose your shirt on the way down, you've got more money to invest when the market does rebound, allowing you to make profits on top of profits, compounding your portfolio, just like Einstein suggested. It makes your investing much less emotional and stress-free, while also helping your portfolio grow at a much greater rate. That's why our members choose to approach the market in this way. It's about running a sustainable portfolio in a consistent manner to grow your money much more over the long term. You want to become a peaceful investor who's ready for the next curveball that the market throws at you, not a stressed out, anxious investor always worried about what's around the corner. Having a systemized trend following swing trading process that always tells you exactly what to buy and when to sell can do that for you. So if you have an interest in seeing how we do it and would like to take a run through with me personally, feel free to call, send an email, or book in a Zoom chat, and I'd be happy to show you through. And of course, if you want to keep up to date with all the new positions that we've bought, all the ones that we've sold off, and learn all the ins and outs of the trading the stock market with a system, then subscribe to the channel and tap the bell to get notifications on all the latest. And as always, this video is for education purposes only and shouldn't be taken as specific advice as to buy, hold, or sell any position in the market. And of course, past performance is not a guarantee of future performance. Until next time, when I look forward to showing you around the markets again, I wish you consistent and objective investing. Bye for now.